almost a year ago. I'll have to make you one. I'll make you a rap battle.
Okay, that would be fun. That would be fun.
Some weekend when I've got time on my hands. All right. Enjoy the trade review, everybody. Don't forget to submit your trades into the off-topic tab for Eamon. I'll let you get to it.
Yeah, thank you again, Peter. And hey, everyone, by the way, before we start the trade review, how do you like AL? I actually was in the chat room and I call it somewhere around here, and I think it's still good. Looking at the 15-minute chart, and not only the 15-minute chart, look at the 30-minute chart. I love those buying pressure wicks right there. Today it's been strong, unfortunately it dropped down a lot, but this pullback is around 70% right here, including the pre-market price action. I think it might eventually reverse it if it breaks the 1350 area. What I usually do trading these type of stocks, I try to buy them as close as possible to the support, and then after they break out I add a little bit to my position, and then on the second leg up I add a third time, and then I just exit all around view up or above it. But yeah, let's see what it's going to do after we're done with the trade review, right? And how did you do today, guys? Hello guys on YouTube as well. Okay, let me see what we have there in the off-topic chat. Okay, I think I just moved the whole thing there. Okay, that's good. Fixed everything. Was this the first one for B-Tang? Yes, it is. So B-Tang traded AAL. You took it to the short side. That's amazing, actually. So the setup was a parabolic reversal setup. The indicators which guided you to take this trade, that the price was extended from view up in the 9-moving average in the 5-minute chart, and the climactic volume at the high of the day. Let's see if we had a climactic volume. It's not literally climactic, but I could see that there is an increasing volume at the high of the day right there, or closer to the high of the day. Entry, you entered after the engulfing pattern. That's the engulfing pattern right there. And the stop was at the high of the body of the reversal pattern. Okay, I like that. I mean, I don't love taking engulfing patterns for one reason, because the risk to reward gets messed up after I enter on engulfing patterns. But if you have a wide stop loss on this one, then I guess it's totally fine, right? You were really patient, held it all the way to view up, and then to a new 5-minute high, I guess. Wanted to get 5 to 1, and you got a 5 to 1. Okay, now let's go through the trade in charts, okay? AAL started the run in the pre-market, and we had an igniting volume right here. It spiked up right at in the pre-market price action. In the pre-market, it continued consolidating till it got closer to the 9 and the 5, spiked below it, and then came back up. And I actually traded AAL for a 1-minute open range breakout, and I'll explain why I took it. Okay, can you hear me now, guys? Peter? Guys, can you hear me now? Hello? Can you guys hear me now? Okay, that was weird actually. I don't know why that happened, but it's fine. Okay, let's get back. I mean, when did you lose the sound, guys? Exactly at what point? Actual restore. Okay, that's perfect. At least that was there. Anyway, now let's get back to the pre-market price action. In the pre-market, AAL got an increasing volume here, and after a long consolidation, an igniting volume usually means that this is the beginning of the move. And one thing one rule I added to my parabolic reversals is not to go to the short side for a parabolic reversal after an igniting move. And I will explain it once I get back to the pre-market price action. Because most of the time, after it's breaking up, it usually either consolidates sideways or it doesn't even make a decent pullback for me to get a good risk to reward. Anyway, because of that and because of that igniting volume and the beginning of the move right there, and let me get actually this lower, you could see that the let me see if we had the 1 minute chart in pre-market. 1 minute chart in pre-market. 1 minute. No, we didn't have that. I'll get that to in my chart. Anyway, you could see that we are forming an ABCD pattern on the 5 minute chart, and this is why I took AL for 1 minute open range breakout. I didn't take AL only for 1 minute open range breakout, and I think I told you before, I love opening range breakouts on the 1 minute chart and the 5 minute chart, but not to be only, and don't take a 1 minute open range breakout only because it made a new 1 minute high, and I will not take a 5 minute open range breakout only because it made a new 5 minute high, right? We need to combine other price action or other indicators or other setups along with our setups, with the setup which we want to trade on smaller time frame. So that was the main reason I took a L to the long side there. Anyway, it's doing the 1 minute open range breakout, pulling back on the 5 minute chart, coming back up. This is sort of 3-bar play right there. So 10 minute open range breakout, right? And this is the second leg up. So this is the first leg up, right? This is the second leg up, and then it's breaking out. Now we're having a third leg up forming, or maybe starting to form, or still not formed, with the stock extended from the 9 moving average on the 5 minute chart, with it doing an engulfing on the 1 minute chart, and now we're going to the smaller time frame, engulfing pattern on the 1 minute chart, forming a new 1 minute low, where B-Tank took it to the short side and had his stop loss somewhere above the high of the body, or above the high of that body right there. So that was a great entry right here, partialing all the way down, getting a 5 to 1. One thing though, if this was a really small position right there, 5% or 10%, I would hold it. And why is that? When the stock is dropping down that much or dropping down parabolically, we are not sure will it make an ABCD pattern to the upside or it's going to do a reverse ABCD pattern to the downside. What's our confirmation? Our confirmation is the W shape. So if it's going to do a W shape right there, I would exit the last 5% or 10% of my position. If it's not doing that and it's actually making a reverse ABCD pattern and drops down, then you could just hold on to it because now it started downtrending all the way till it finally starts holding this moving average right here, starts to look like a reversal, and then maybe here you could just bail on it, or maybe here because you are now having sort of a W shape right there to bail on the rest of the 5%, and that would be a good move right there, right? Because now it changed the trend and it's making lower high and lower lows, and now it's just starting to hold on to that support right there. Right. Thank you, Charles. Now let me show you the pre-market. That's it. You see the volume here in the pre-market? This is the igniting volume. This is the beginning of the trend. And this is why I don't love taking parabolic reversals right after the ignition. Right? When the volume is increasing in the consolidation area, this is an igniting volume which begins the trend. When you're having an increasing volume at the high of the day, that's a climactic volume, which might be a sign of a reversal. So I usually wait for it to do that first break up, and look at this. What do we have here? We have sort of a W shape, right? After a huge move, going up, parabolic pullback. Now we're having sort of a W shape right there, along with an ABCD pattern on the 5 minute chart. A, B, C, D pattern. I take it to the long side right after it bounces off the support which it held in the pre-market, which is the 50 moving average on the 1 minute chart. Right here, and Andrew also took it for a 1 minute open range breakout, right? Then I'm adding to my position after it actually dropped down. I saw that we had an engulfing on the 1 minute chart. It got bought back up. I'm adding to my position. It's also a new 5 minute high right there, and exiting all into partials right there. One, I wanted this partial actually to be at the high of the day, but I think I get a better feel. And then the last one, just because I hit my daily goal right there. Okay, let's see what else we have there. Ivan traded W day. So Ivan traded W day. W day, it was a 2-minute hammer. 2-minute hammer at the high of the day. Stop loss above the previous week. This week right here was the stop loss for Ivan. 5 cents stop, 55 cent risk. And yeah, on the $200 stock, which is moving, I don't know, around $14 with no pullbacks, 55 cents, it's totally fine. Question for Raymond. You said you don't take parabolic reversals of engulfing candles. If there is a hammer on the 2-minute chart and an engulfing on the 1-minute chart, like here, would you take it? I personally would still not take it because I don't love having my stop loss within the candle. Like here on the 2-minute chart, yes, you didn't have it within the candle because you have a reverse hammer right here or a shooting star on the 2-minute chart, which is really clear. But on the 1-minute chart, it would be within the candle. And I'm not sure, but I get the feeling that a lot of traders, they are using there are more traders who are using the 1-minute chart than there are traders who are using the 2-minute chart. It's not statistic. It's not something I'm 100% sure about. It's just something I have a feeling about. And usually after engulfings like this, I notice they either bounce off the 9 on the 1 or the 9 on the 2, and it just ruins my risk to reward if I have my stop loss like way far right there. With the tight stop loss like you definitely had some good risk to reward right there, where you had I don't know, 2 to 1 or 3 to 1, and then you exit the rest at your original stop. Unfortunately, it got you stopped out and then worked out. That's what I hate. See, if the stop loss was at the high of the day, like not within the candle but at the high, you definitely wouldn't have taken a partial here, and yes, the stop loss would have been so big, but at least it would have worked out, right? And then after the second top, which is lower than the first one, you could always add to your position, maybe here, maybe after the breakout, and move your stop loss to a lower position than it was initially. If so, where will you place your stop? Yeah, that would have been my stop loss if I had taken this. If I decided to take this setup, that would be my stop loss, the high of the body. When you take partial at the bottom of the 5-minute candle, it is less than 3 hours. Will you move your stop to break even? I move my stop loss to break even after I take partial, but it's something I need to work on, and I think on parabolic reversals, I will most of the time move it to break even if it consolidates for extra 2 minutes after my first partial. If I take a partial and on the very next minute it gets me stopped out at break even, or if I take partial at the first minute and on the second candle it gets me out at break even, that's when I'm going to hold on to my original stop loss. I do take a partial at the bottom of the 5-minute candle, but I need to have my risk to reward there. If the bottom of the 5-minute candle is giving me less than 2 hours, I will not partial there. If it's giving me more than 2 hours, yes, I will take a partial at the bottom, then I will go to the 9 moving average on the 5-minute chart. I'm missing one thing, probably you have shared earlier. When the trend is higher high, should we take any trade in reversal? What are the factors to consider? Ranajit, are you talking specifically about this trade right here, or a similar trade to this one? Yeah, so as we usually say, or always say, you can take a reversal against a clearly trending stock which didn't do any pullbacks. These type of reversals we call parabolic reversals. We don't go for a reversal with a really wide stop loss and a target of VWAP and below. We play the pullbacks. When the stock is so strong and it's trending, it will do pullbacks and it will go up. It will do a pullback and it will go up. It will do a pullback and it will go up. I mean, just something like that, right? And we don't want to make the money on a reversal all the way to VWAP. How do we trade this? If it's going straight up, we make money on these moves here. This move here. This move here. But the most important factor right here is to have a stock which is so extended from the 9 and the 5 and which is going straight up. Okay? If it goes more than that, then that's good. If not, then we made money on the pullback. That's how we play it. I mean, should we be adding to a position at the consolidation? To the short side, Sam? If you mean right here, this is what I call a double top with the second top lower than the first one, or double top when the stock is still extended from the 9 and the 5. I love this pattern. So you're having a double top on the 1 minute chart while the stock is still far from the 9 moving average in the 5 minute chart. It fails to break the high of the day and it's coming back down. And on those type of setups, it works even better than trying to take it the first one or the first time. Where will this be posted? Uncle B, it's on YouTube, but sometimes it's completely reversed to you. You can't really detect it. If we could do that, we would hold it all the way to view up, and that's why we're taking partials. We don't exit all out. So my key on these setups is to exit 70% at the 9 moving average in the 5 minute chart, if I believe that it's so weak, okay? At least 70% all out at the 9 moving average in the 5 minute chart, and then hold on hoping for a bigger move. So Enzo, what I go for is 1.5% to 3% at least, far from the 9 moving average in the 5 minute chart, okay? Or at least 4 to 1 risk to reward between my entry and my target on the 9 moving, which is the 9 moving average on the 5 minute chart. Why would I go for at least 4 to 1? So that I could partial at 2 to 1 or 3 to 1 if the percentage is not there. And I need it to be straight up. We don't want to go on a parabolic reversal or for parabolic reversal on a stock which is going like this, or which is going something like this, even if it's not making a pullback, even if it's higher highs and higher lows, right? But it's clearly trending on the 5 minute chart. And why does it make this type of trend? It's making this type of trend because on the 1 minute chart it's trading like this. So it's tough to catch a parabolic reversal on it when it's making a lot of fake lows. We want something which is going straight up and then a clear reversal candle or volume indicator to take it to the short side. You're welcome. Now let's see what DHPAC did. DHPAC traded Microsoft. And this was also a parabolic reversal, and look at this. DHPAC actually gave it 2 attempts before it worked out. I wouldn't have taken it on this candle right here to the short side. I would have waited at least for this candle right here, I think. And let's see that. 1, 2, 3, 4 candles right there, right? This was the 3rd candle. It gave you a red candle. At the high of the day, new 1 minute low, you are taking it to the short side. Stop loss a little bit above the body and you'll lose right there, which is decent, right? Now you're having a climactic volume or increasing volume at the high of the day, which is a good sign. I don't really love taking it on an engulfing or a big green body candle with a wick above it. Most of the time I would wait at least for the next candle to close, then take it on the 3rd or on the 4th candle, and then go for the risk to reward. And you see why we go for a target the 9 moving average in the 5 minute chart, guys? Because most of the time, if the stock is so strong, it's just going to the 9 moving average in the 5 minute chart, touching it, and then it goes all the way back up, right? Maybe it will go lower than that, but we don't want to hope. The stock is really strong. The stock is uptrending, and this is the first pullback. This is the W shape, by the way, right there, if you look at it. Parabolic pullback, dropping down, coming back up, and this is where you could take your position, put your stop loss, and go for a target the high of the day or the break of the high of the day, because this is an ABCD pattern, and an ABCD pattern is a breakout setup. After it's breaking up, if it's giving you sort of an ABCD pattern on the 1 minute chart right there, you could always add and move your stop loss to the previous resistance. So initially your stop loss is the low of the consolidation. After that, and after you add, if there are some signals on the 1 minute chart, you move your stop loss to the previous resistance, which is here, and get a bigger reward right there, because this here it will be a 2 to 1, and I don't want to get only a 2 to 1 on this big of a move. That's why on trends we should add if there is a possibility to add. I have a question. I'm monitoring the screener on trade ideas. However, some stocks we reviewed are found in a different way. Do you have any suggestion for scanning stock? So Eric, I always keep a close eye to the stocks in play or stocks which we had on watch list. I have my main watch list, Then I have my secondary watch list, and I keep just couple of good runners from the previous day. After the market open, if I see some stocks just consolidating and doing nothing, I go through those stocks which I have, and I see which one of them is making a parabolic move or making a clear move. I also keep an eye on stocks which are starting to go for a breakout. If the breakout is not so clear and I don't like to take this stock for a breakout, I would let it do the breakout, because after the breakout it will run, and after that I would take it to the short side if it's giving me the opportunity. And also a lot of members are calling really good stocks in the chat room for those parabolic reversals. Just keep an eye on the chat room and watch what members call it right there. Don't get FOMO. Don't trade every call you have in the chat room, because this will end up breaking our blowing up our accounts, right? Just be patient right there and wait for your setup. Yeah, most of my position I'm out at the non-moving average on the 5-minute chart or closer to it. You could definitely partial before the 9 on the 5 if you are having good risk to reward. Let's say here you're already up 4 hours and the 9 will be 8 hours. You definitely don't want to have all those 4 hours going against you and end up having -1 hour after being up at your daily goal, right? That's why you could take some partials as it's getting closer to the 9, and at the 9 or closer to it you're getting your biggest partial. Jason V, can you send it to the off-topic chat please, so that I just don't miss it right here? And thank you. So let's see what else we have. Charles traded ABT. Yeah, definitely I'll do that, Jason. Just send it to the off-topic chat so that I don't miss it, okay? Here in between the chat. So Charles traded ABT, and I guess this was also a parabolic reversal right there. Here we have a setup, right guys? A bullish engulfing sandwich. A bullish engulfing sandwich is a short setup, and this is a good 15-minute open range breakdown, right? We're having a bullish engulfing sandwich right here, which is a short setup. It's sitting at the pre-market level right here, and the breakout of the pre-market level along with the breakout with this setup, it's a 15-minute open range breakdown. You could take it to the short side somewhere down here. You also have a reverse ABCD pattern on the 1-minute chart. You see how everything is aligned? Reverse ABCD pattern on the 1-minute chart right here. You have a bullish engulfing sandwich, which is a short setup. You have a pre-market level right there, a 15-minute open range breakdown setup, and that is a 15-minute open range breakdown setup. You take it to the short side, partial, and then seeing that it's actually getting increasing volume at the low of the day, getting so extended from the 9-minute average in the 5-minute chart, 2 big 5-minute candles, new 1-minute high, tight stop loss. I would put it a little bit higher right there, but I guess if you put it a little bit higher, you would have been stopped out. And this is why we say like the low of the day is literally the safest stop loss, but it messes up our risk to reward sometimes. I guess having the low of the day here saved you from getting stopped out right there. And then you just take the partials all the way to the 9 and the 5. And look at this, it's getting to the 9, a little bit above it, and then it's just dropping down. This is why we say that the 9-moving average is an average. Sometimes it's getting closer to it, sometimes it's touching it, sometimes it's wicking above it. So the moment we get closer to the 9 and the 5, we want to get the biggest partial right there, because if the stock is weak, it will just continue dropping down. Now this is a parabolic pullback, right? We don't take it on the first new low for a reverse ABCD pattern. We wait for an M shape, which is right here. We take it to the short side somewhere there, put our stop loss at the high of the wave, and then go with the trend right there. You took this setup to the short side, Zen? This is actually really good. And look at this, guys. This is the beauty of knowing a lot of setups. If you know a lot of setups, you don't need to trade them. In fact, you'll lose a lot of money if you're trading literally every setup there and if you're not good at it. But when you know a lot of setup, they will give you some signals of where to exit or when to enter. Zen, for example, he was short. I'm not sure whether if he shorted it at the high right there or if he shorted it here. But anyway, he knows the parabolic reversal setup. He knows that this is the place where it could actually start pulling back all the way to the 9 and the 5. And if your entry is right there and you know that it could could pull back all the way to the 9 and the 5, you know that you will actually, oh sorry, then she. Anyway, you know that you will be stopped out eventually right there. You will not survive the pullback, right? That's why you just exit the rest of your position here, and you could always re-enter if it's giving you a good entry right there. I'm sorry about that. Anyway, I'm sorry to interrupt, but the mouse pointer does not show in the video feed. Yeah, I know that. I have no idea why it's not showing, and for that I actually try to use the pen a lot. Here, let's see what you did right there. Both BIGC and ABT trades were based on levels, time and sales, and level 2. I tend to trade with the big prints, whichever way they run, based on the setup, of course. So here is trading of the time and sales on level 2, and that's really good, guys, right? The level 2 and the time and sales are the only indicators which are showing you, especially time and sales, which are showing you what's happening exactly right now. Candles, moving averages, everything we have right there is a lagging indicator, except for the time and sales, right? Even the level 2 is slightly lagging because it's showing you what could happen, but the time and sales, it's showing you what's happening right now. Trading out of that, if you become good at it, is really good. And here he traded based on the time and sales and the level 2, and despite that, I also see that it's really good on the chart right here. You're having a level, right? It's breaking that level, which is a fake breakdown, moving average in the way, which it held, and coming back into the range. After the breakout, we don't like the stock coming back into the range. Combining this with the time and sales and the level 2, which you saw right there, this made it a good setup. Without the level 2 and the time and sales, I wouldn't have taken this entry to the long side right here. I personally would have taken it once it's breaking this level, and I would give it a wide stop loss. So I would take it to the long side somewhere here after it's breaking the level, and I would give it a wide stop loss somewhere at the lows right there, okay? Then it's breaking out, and after the breakout, if it's pulling back and holding the previous resistance as a support, I could double my position or add to my position and move my stop loss to the new level it actually bounced from. This will also be a 5-minute open range breakout. This is the 5-minute right here, guys. This is the breakout of the 5-minute candles, right? And this should be a good stop loss for the 5-minute open range breakout, half of the candle, along with a good setup on the 1-minute chart. So yeah, entry here at the breakout, another entry right there. But since he saw something there on the prints, he got a really good entry right there, and that was a really good run right there, Heather. Yeah, really good job on this one. So whose trade was this one? Let's see quickly. Zach traded AMC. So let's see what you did there. First trade on AMC was because it appeared to be bouncing off a daily level, and it made a small doji on almost double of the daily volume. You took half off at the 2 hours and then stopped out after. Would have been a better trade if the 5-minute chart was more extended. Then you entered at 10:21 and sold off. You took half at 2 hours and then you got stopped out. The rest at break even. One more time, unfortunately. You entered the 3rd time to this position and you got stopped out one more time, at which you lost 2 hours. And I could, yeah, actually I see what happened right there, and we'll go there now. So look at these guys. Understanding this, you actually took it to the long side multiple times, right? No, it was actually short multiple times, yeah. Yeah, those were all shorts. So let's take a look at AMC, okay? You're having a daily level here, above which it actually wicked and got sold off back down, and you decided to take it to the short side because it had an increasing volume. Now guys, look at this here. You see this volume? Is this a climactic volume or igniting volume, per what I discussed at the beginning? You see a consolidation right here, right? It's consolidating, breaking out, pulling back, consolidating, and this volume right here is igniting. It's not literally climactic, it's just breaking out, right? You see, it's just breaking out. This is the breakout volume, which is the beginning of the trend. And after the breakout, volume starts to increase. Okay, volume starts to increase, and people are getting in, maybe chasers, maybe momentum plays, because momentum players are not the type of people to buy low, sell high. They're the type of people who buy high, sell high, right? They are going with the moment, and they will definitely not let it go all the way down there against them, but they will go with the moment, right? So they will be partialing right there. And this is why I wouldn't take it to the short side here. It just began the move, and remember what I told you guys, I mean, it's a new rule I added to those parabolic reversals. I don't take the first new 1 minute low after an igniting volume, because it could just simply make a quick another leg up. So this short right here and this short right here, I would have avoided it. Despite the igniting volume, I wouldn't have taken those two shorts right here, because there was no reversal candle right there, right? Now look at this, it's just breaking up. You're getting stopped out one more time, which is fine. Forming a reversal candle at the high of the day, which is decent, right? You are taking it to the short side on a new low and it's getting you stopped out, which is fine. Like this trade right here, if you had taken it to the short, it would have been decent, it wouldn't have been so bad, and unfortunately you get slippage, and we actually discussed that, right? This is why I don't really love using the high of the day as my stop loss. I go for tighter, because if it breaks, it's get me stopped out. Now this is the climactic volume, not this right here, right? This is climactic volume. It's the high of the day. It's double of the average volume we had recently. It has a bigger upper wick right there. Sorry about that. Once it makes a new low, and that didn't happen there, it happened here. You could take it to the short side, have your stop loss somewhere at the high of the wicks, or half of this week, definitely not at the high of that week, and then go for the move. I see that you actually caught it. You took it to the short there, you had your stop loss at the half of the week maybe, and then you finally caught that big reversal right there. How much did you eventually ended up having in this trade, Zach? I mean, after all those losses? Did you only make the losers back, or you could end up green? And after the partials? Yeah, it's green. Okay, that's good. I love that you actually could manage this one really well, and you ended up green despite having multiple losers on it. So, but yeah, again, this I would have avoided because of this volume right here. Is just the beginning of the move, right? This short I would also have avoided because it's against a bigger upper wick. This one was good. You get stopped out, you re-enter, and then it just works out. So good job managing this trade really well. Hey, Muhammad Azhar. Now let's see what Nabil did right there. So Nabil traded BA, and let's see what you did in BA. You traded it twice, right? Once to the long side, another time to the long side, and then third time to the long side, and then you shorted it. Am I right? And then you longed it. Or was it like that? Okay. So you traded only BA today, I guess? Paid close attention to it and just traded it all the possible directions, right? No, good job, good job. So let's see what you did right there and if those trades made sense, right? First trade, a 5-minute opening range breakout. Stock is close to view up, right? Making an ABCD pattern on the 2-minute chart. You take it to the long side, you have that as your stop loss, and then you take partials. You see a shooting star at the high of the day, and you exit the rest of your position right there. That actually fails, right? So you re-enter to the long side, take some partials, add to your position another partial. It gives an engulfing at the high of the day. You take it to the short side, quick partials at the 9 on the 2 because it could bounce out of there. It's holding, you take it to the long side, and you are taking some partials. So this is what we see on the 2-minute chart, right, guys? And it does make sense on the 2-minute chart to do all this. Now let's see on the 5-minute chart. Like the first trade, I like it so much. It does make sense. It is really technical. You're having a 5-minute candle, a really bullish candle on the 5-minute chart. You're having a consolidation. It's close to view up. It's making an ABCD pattern on the 2-minute chart along with a 5-minute open range breakout. I like this one so much. It's going up, right? This I would have avoided, to be honest, because it's already the 4th 5-minute candle and I'm not sure how much is going to go right there. It was against a shooting star right there. And knowing the parabolic reversals, I know that sometimes they will respect the high of the week and then drop down. So I wouldn't have really felt comfortable going against the week. I would have just waited for this whole price action and let it do whatever it does. Looking that at the high of the day, it starting to struggle. It's making a fake breakout here. And then it's making a double top with the second top lower than the first one, which I really like. Having a reversal candle, you could take it to the short side there, have that as your stop loss, and go for this whole move right there. So good 5-minute open range breakout. Now again, here I wouldn't have exited the all only because of the shooting star, okay? Yes, I know that it might drop and go for a parabolic reversal after a shooting star on the second candle maybe, or on the third candle, right? But what did we have here? We had an ABCD pattern on the 5-minute chart. It just broke out, right? We have a pivot point right above us. We had a really good entry. You could exit most of your position there if it gave you the good risk to reward, but you could also hold on and see if this pivot point is going to hold and if it's going to continue going higher. If that happens, you could add to your position. Why is that? Because after the add, you will not risk any realized money. You will risk only the unrealized, and the worst case scenario is that the trade will go against you and you will lose the unrealized money after locking in some realized. That's definitely better than adding to or getting full position again right there and getting stopped out, giving half of the profits which you made on a really good setup. This short I would have personally avoided, because look at the risk to reward, right? You're taking it to the short side, maybe here, and you're partialing exactly at the 9 on the 1-minute chart. So the risk to reward is not there, right? Then you're taking it to the long side on the way down, and we don't want to take stocks to the long side on the way down. Why is that? Because we're not sure is this the end of the pullback or no. It could make a new 2-minute low, get you stopped out, and then work out in your favor. So the safest way to play those is just to wait for a new high and then take them to the long side. Though I wouldn't take it to the long side on a new high because it's just already so extended right there. And I see that it's finally struggling. I would prefer waiting for a reversal or parabolic reversal, which happens later, and play it to the short side. But good job. I mean, I guess you're at the goal today. Sam, let's see what you had right there. Sam traded NIO, and that was, I'm not sure what that play was, if it's a long or a short. Let's see the second trade we have, because that we can see on the chart. Now this is a good one, guys. Look, we have a high of the day, then we have a low of the day, right? Then we have a high of the day, we have a low of the day. What do we have right there? Lower highs and higher lows. Does that tell us anything? Not yet. It could be short, it could be long, I'm not sure. From the bottom side it's showing me that it's strong, from the upper side it's showing me that it's weak. On the daily chart it's strong, right? So the daily chart is telling me that it's strong right there. I want to make sure where it's going to go before I pull the trigger on and before I just waste my ticket on this trade. We're having a new high, which is still lower. We're having a new low, which is higher, right? Still not sure what it's going to do. And still, because it's below the moving averages, I'm kind of short biased on it. But let's see what's going to do after that. What is this? A break of the pivot point. Finally making a new high. And he's taking it to the long side. This is a perfect entry to the long side. And in this case, I would put my stop loss at the low. I wouldn't really put it at a new 5-minute low. Why is that? Because if you want to go for a quick play and for a quick scalp, you could tighten your stop loss and take partials quickly on the way up. If you want to go for a trend, you definitely want to widen your stop loss, and once it makes a higher low, you would add to your position, moving your stop loss to that high right there, okay? Now it's going up, it's breaking up, which is amazing. And after the breakout on the 5-minute chart, it's making an ABCD pattern on the 1-minute chart right there, where you add to your position, which is actually really smart. Taking another partial, and then you are adding one more time, and that I wouldn't have done right there. Why is that? It's getting back down into the range. That was a little bit scary. I would have waited. This is a parabolic pullback. This right here would have been a good place to exit most of your position out. Why is that? It's 1, 2, 3, 4 below a daily level, no increasing volume, reversal candle, new low. This is a parabolic reversal right there. I would exit most of my position out because I know that some people will be playing this setup to the short side and dump this trade against me. If my average is way down there, I would hold on it on some of my position, maybe 20%, maybe 15%. If I see it's making a W shape, I would add to my position. Okay. If it's not doing that, I would just bail on my trade. Now, if my average is somewhere at the 9 moving average on the 5-minute chart and it's making this, I will exit 100% of my position right there. Why is that? Because I know that on parabolic reversals, most of the time, not most of the time, a lot of times, it's going to the 9 moving average on the 5-minute chart, and I don't want, and I know that I will not survive the pullback. Since I will not survive the pullback, there is no reason for me to hold it to the 9 moving average on the 5-minute chart. Just bail on the first setup, which is forming against me. Okay. Here, I didn't really miss it. I'll definitely get back to it. It's just that I go through one trade for everyone, just in case I don't have any time. Once I go through all the trades, I will get back to that ABT trade. Sorry, I didn't mention that, by the way. Okay, now let me see if I missed any question right there. Okay, I guess I missed nothing right there. Perfect. So Del, let's see what you did. Del traded QDel. And let's see what you made right there. Unfortunately, I don't have a lot of data. So guys, just for the future, if you are taking screenshots, make sure to show more previous data, right? We want to see what happened before there, just to anticipate what's going to happen after that. On the 5-minute chart, I see that we have a daily level right on the way. It's starting to make double dojis, which are reversal candles. You are taking it to the long side on a new 5-minute high. Unfortunately, that's a little bit late, but I guess I know why you did that. You wanted it to go above the 9 on the 5-minute chart, right? Just in case. Now guys, remember this, that the 9 moving average on the 5-minute chart, it's an average. It could go closer to it, it could go to the 9 on the 5, and it could go a little bit above it and then drop down. So a stock breaking the 9 moving average on the 5-minute chart doesn't necessarily mean that it will run after that. It could just wick a little bit above it and drop down. And if it's possible to get an earlier entry, it's definitely better to get that one instead of this one. Why is that? If you get an entry right there and it bounces off the 9 moving average on the 5-minute chart and goes against you, you could exit at break even, right? If you get an entry somewhere at the face of the 9, it could just immediately start going against you and you will exit at a loss. So if possible, better getting an early, way earlier than the 9 moving average in the 5-minute chart, especially that you are having an increasing volume at the breakout right there. Now really good partials on the way up, little bit too much partials, right? But still you held it all the way to VWAP, and that was it. There is one more trade I missed. I think someone didn't send it to the off-topic chat, though. Let me quickly go there because I remember that. It was Jason. Can you help me interpret this chart if it's an ABCD pattern? Okay, let's see that, Jason. So look at this. 10:30. Stock is breaking up with volume, igniting volume, right? It was dropping down with really low volume. Started holding the low of the day, fake breakdown right there, then it's squeezing above the 9 moving, above VWAP and above all the moving averages, and then going all the way to the daily level. Now what do we have right there, guys? We're having the high of the day, it's dropping down. We definitely don't take it on the first leg up, it's making reverse ABCD patterns, holding VWAP, And I guess I would have been interested in it somewhere here to the long side. I wouldn't have liked it to the long side here because it could just break down or make a reverse ABCD pattern. I'll be comfortable the moment I see a higher low and a higher high. So we are having the low here, the high here, the low here, the high here, the low here. And I see that finally it started changing or trying to change the trend. It would have been a decent long, maybe here, maybe here. We'll have a pivot point right on our face. Then we'll have another pivot right there. So if we are long, we might want to get good entries with good stop losses so that we could get 2 to 1 on those pivot points to take partials on them. And you see that it went past through the first pivot point, but the second pivot point it actually held and started dropping. So yeah, we definitely would have wanted to get some earlier entries right there with tighter stop losses to get a good risk to reward. And I would have avoided this entry here. Heezer, let's see this. So Heezer traded ABT on the 1 minute chart. This was also a guess time and sales level play because I wouldn't have anticipated this right here. I see a daily level, I see that it's making a lower high, but I definitely wouldn't have picked it to the short side up there. I'm not sure what you saw right there. I mean, I would play this if I have a wall, like if I have strong wall on my way, which I'm sure it's not going to break out, similar to the trade I did that time on LI, which was 1 cent stop loss. I would take this one even with no confirmation. If you saw something like that, it's perfect. If you saw something else, it's really good as well. I think you saw big orders, you said, right? Very big print. Took it to the short side and went with the print all the way down. So yeah, amazing there. Really good risk to reward. What was your stop loss when you went with that print? Was it the high or it was up there? Lower than that. Okay, amazing. Really good job there, Heezer. So let's see what AL did before we end up. It was holding that 200 moving average. I'm wondering if it actually reversed or if it failed. It actually failed right there. So yeah, never broke the 1350 and never reversed. Now it's dropping down. You see it was forming a pennant and that's why we wanted to see it going above 1350. Normally, how would I trade this? I would take a position inside the consolidation area because I like the 30-minute chart. And I would wait for it to break the 1350. Once it's breaking the 1350, I would add to my position, move my stop loss to the previous resistance area, and hope that it will go to view up and above that. Safer way to play it, as we said, is to make sure that it's breaking the pivot point right there. Take it to the long side at 1350. Once it makes second leg up, add to your position. So yeah, this actually failed. It's dropping down right now. And I'm not sure what's going to do right here. Let me actually see what we have on the 1 minute chart. So yeah, we're having a resistance right here, which is a pre-market level. Definitely doesn't mean that this will be a long, but if it consolidates, makes a new 15-minute high of this level, it would be interesting. If it's breaking it, we'll have another one down there at 1305. I guess I'll keep an eye on it for a reversal. I'm not going to trade it, but just going to watch it. We'll see what it's going to do after that. So yeah, have a good day, everyone. We ended up 10 minutes earlier today, which is not bad, right? If you still have any questions, you can always email me, ayman@beerbletraders.com. Guys on YouTube, thank you for staying there with us. If you have any questions, you could always email me as well. I'm typing my email right there. Have a good day, everyone, and trade safe.